Hello and welcome to AI Market News by LM. Wow, what a day. The markets are absolutely on a knife's edge right now. Geopolitical tensions just exploded and oil prices went right along with them, just straight through the roof. So today we're going to break down exactly what happened, how the markets are trying to digest all this, and what we really need to keep our eyes on next.
So where did this all kick off? Well, it was a primetime address from the White House. President Trump's pretty aggressive comments on Iran basically just shattered any hope we had for a quick, peaceful resolution. And boom, that sent an instant shockwave rippling through global markets.
All right, so let's really trace this fallout. We're going to start right at the epicenter of this, this financial earthquake, the oil markets. And then we'll follow those tremors as they spread out from there.
Yeah, this number right here, it really says it all. We're talking about West Texas Intermediate crude. That's the big U.S. oil benchmark, just skyrocketing, up 11.8% in a single day. I mean, that's not just a little price jump, right? That is pure, unadulterated market panic over a potential supply crisis.
And here's exactly why everyone's so spooked. It all comes down to this, the Strait of Hormuz. This is an absolutely critical choke point for the world's entire energy supply. So the second news broke that traffic through this vital waterway might be restricted, well, the market just went into an absolute frenzy. It's a really sharp reminder of just how fragile our global energy supply chain actually is.
And if we look at the raw numbers, you can see just how wild this spike was. WTI crude blasted past $111 a barrel. And at the same time, you've got Brent crude, the big European benchmark, hitting its highest price since way back in 2008. So what does that tell us? It tells us this fear isn't just some abstract thing on a trading screen. It's about the real-world physical supply of oil.
Okay, so with oil prices going absolutely parabolic, you'd think the stock market would just collapse, right? But that's not what happened. Not exactly. The reaction we saw in stocks and bonds was, well, it was a lot more complicated. And frankly, it was a little bit strange.
This chart, it really captures the day's bizarre behavior perfectly. I mean, we saw an initial nosedive. The S&P 500 dropped as much as 1.5%. But then, somehow, the major US indices clawed their way all the way back to finish the day almost totally flat. It was just an incredible and honestly a pretty confusing turnaround. But look, that flat finish in the stock market, it's really misleading. If we want to get the real story, to see what investors are truly worried about, we have to look under the hood. We have to look at the bond market. And what we're seeing there, well, it's a major disagreement about where the economy is headed. It's like the bond market has this complete split personality right now. On one side, you have investors piling into inflation-protected bonds. They're basically betting that these crazy high oil prices are going to lead to soaring inflation. But then, on the other side, yields on regular government bonds are barely moving. What does that suggest? It suggests investors think the Fed has its hands tied, that they can't raise interest rates to fight inflation without totally tanking the economy and causing a recession. And that combination, high inflation plus low growth, well, that's the recipe for stagflation, and that is pretty much an investor's worst nightmare. Now, all of this uncertainty, it's not just contained to stocks and bonds. It's also spilling over into the currency markets. And currencies are often the most sensitive barometer we have for global risk. And right now, a really key battleground to watch is the US dollar versus the Japanese yen. The exchange rate is getting dangerously close to that 160 level. Now, why does that matter? Well, it's a huge psychological line in the sand. It's a level where, in the past, Japanese authorities have actually stepped in to prop up their currency. So you can bet traders are on extremely high alert for a potential intervention. Yeah, and the data really confirms it. We're seeing a stronger US dollar pretty much across the board. But the number we've really got to focus on is that USD/JPY, sitting just shy of that critical 160 mark. It tells us something really important. Even as investors are running to the relative safety of the dollar, there is immense tension building up around the yen. So let's just take a step back and recap for a second. We've got skyrocketing oil, we've got really confusing action in the stock market, a bond market that can't make up its mind, and a ton of tension in the currency markets. So with all these conflicting signals flying around, what's the overall mood? What are investors really feeling right now? Well, one way to cut through all the noise and just get a simple snapshot of investor sentiment is to look at something like the Fear and Greed Index. It's a neat little tool that basically combines 7 different market indicators, everything from momentum to volatility, all into one simple gauge of market emotion. So, after a crazy day like today, which emotion is actually winning out? Is it greed? You know, with some investors trying to buy the dip in stocks? Or is there something else, something bigger, driving the whole market? And the answer really is undeniable. It's fear. Plain and simple. I mean, despite that weird recovery in stocks, the absolutely explosive move we saw in oil prices, it just reveals a market that's completely gripped by deep anxiety and just profound uncertainty about whatever comes next. Okay, with so much uncertainty just hanging in the air, let's turn our attention forward and look at the upcoming economic calendar. Believe me, the next few data releases are going to be under a microscope as everyone searches for clues about where this economy is headed. So first up, let's talk about the Fed. According to the CME FedWatch tool, the market is pricing in a whopping 99.5% chance that the Federal Reserve will just keep interest rates on hold at its next meeting. Let me put that another way. Despite this huge inflation threat coming from oil, the market basically thinks the Fed is trapped. Their hands are tied.
And looking ahead at the economic calendar, courtesy of investing.com, the next week or so is just packed with critical data. It all kicks off with the U.S. jobs report. Then that's followed by two massive inflation reports, the PCE price index and the CPI. Mark your calendars because these three reports are going to be absolutely crucial in setting the market's direction from here on out.
So in a market this volatile, it seems the only certainty is more uncertainty. Staying informed is really the best thing any of us can do. Okay, and now for the disclaimer. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.